And now on to Homes Today. This is a presentation of Miss Audrey Forshey, who is an advisor as well as a well-known realtor at Remax Realty. Today, Miss Forshey is caught in a discussion, and that's a panel discussion, mind you, with CPA Adil Baloch and attorney Ramesh Khurana. And their topic of discussion is Section 1031 Exchange. Let's see.
Hello viewers, welcome back to Homes Today. I'm Audrey Forshey from Remax Realty Services located in Rockville, Maryland, and we also are in the Bethesda office. Today we're going to do a panel discussion with our esteemed colleagues. We have Mr. Ramesh Khurana and Mr. Adil Baloch. And Mr. Khurana is an attorney in Maryland. He's in Gaithersburg, and he practices law there. And Mr. Baloch is also, he's a CPA located in Montgomery Village, Maryland also. So I welcome you to the show.
Thank you.
And please, I thank you for coming and talking to us. Today we're going to talk about 1031 tax exchanges. But first we'll let our guests introduce themselves, and then we'll get on with the discussion.
I'm Ramesh Khurana, attorney at law. I have my office in Gaithersburg, Maryland.
Thank you.
And thank you for the nice introduction.
Thank you.
I'm Adil Baloch. I'm a certified public accountant and a certified tax resolution specialist, and my office is in Montgomery Village, Maryland.
Thank you. Thank you both for being here and helping us with this.
Thank you for
important
inviting me.
Thank
Thanks for
you.
the opportunity. Sure.
So today we're going to talk about 1031 tax exchanges, and this will be important to people that maybe have investment properties or they're looking to exchange what we call like-kind properties. So without further ado, let's start talking about that. The first question I have for you, who is the ideal candidate for a 1031 tax exchange?
Audrey, thank you very much for asking this question. But at the very outset, I would like to say that 1031 tax exchange 1031 section of the Internal Revenue Code is very close to my heart, and I'm pretty sure you are a renowned real estate agent, so is to you, and so is to my friend, Mr. Adil Baloch, who is a CPA. When I was having a conversation with Mr. Baloch, he told me that he has helped several people in basically having this 1031 exchange transaction. Because under 1031 exchange transaction, you are deferring the capital gains tax. Simple tool. But when you said that who's the candidate, remember one thing, this is not meant for the properties which are your principal residence.
Okay.
You know, it has to be an investment property
Okay.
or property for producing income, like commercial properties,
Oh, okay.
farmhouses, those kinds of things.
Okay.
But it cannot be your principal home. And other important factor to be remembered is that both the properties, because the property which you are selling is the relinquished property, and the property which you are going to buy to replace it is called the replacement property.
Okay.
So both the properties must be situated in the United States. To elaborate it further, if you have one property in Maryland, you cannot exchange this for a property in the UK.
I see.
So these properties have to be within 50 states or District of Columbia.
Okay.
Again, why I'm making this point is that all these investors and businesses, they have to think about it, that it's not restricted to one particular state. You can have cross the border transactions as well. Now, another important point is, as I said, the relinquished property must be used by the exchanger. The person who is doing this transaction to defer capital gains tax is called the exchanger. So it has to be a rental property, or it has to be a business production property whereby some kind of income is produced.
So if I am an investor and I have a rental property, then I can exchange it for another rental property. Is that correct? So if I own, let's say I own an apartment building in Maryland, but I want to move to Florida. I want to buy an apartment building or a rental property in Florida, so I can do it that way. Is that correct?
It can be any kind of property.
I see.
So long as this is an investment property and it's
Okay.
not a principal residence.
Okay.
Yes.
Okay.
Couple of things here, just to interject here, just to complement what the two of you just mentioned. Number one, if you are in a situation where you have a duplex, a triplex, or a fourplex,
Okay.
part of it is being used as a primary residence, and the part is being used as an investment property. The portion that is being used as an investment property does qualify for 1031 exchange.
Oh,
Now,
okay.
if you're selling the entire unit, the entire multi-unit building or whatever that is, you can actually prorate your 1031 exchange. You can still get your primary residence capital gains exclusion, and you can do the 1031 deferment. And another thing I just wanted to mention here, you talked about an apartment a rental apartment for another rental apartment. When it comes to like-kind exchanges, the law is actually very liberal.
Okay.
Like-kind, to me, the only thing that it specifies, like-kind, it has to be a property, or multiple properties for that matter, of same or higher value.
Okay.
That's the only thing that I gather from like-kind exchange. You can actually have a ranch, 1031 for a strip mall. You can actually have a rental apartment building for a piece of land. So it's very liberal when it comes to the exchanges. You can have, as long as it falls within the definition, it's rental, commercial, revenue generating property. Yes, you can do all that. Now, also, there's other guidelines that one has to be careful about. You cannot buy a partnership interest as a 1031 exchange. You cannot buy bonds or notes or receivables or those kind of things for that matter.
Okay.
It has to be a property.
A real estate.
A real
prop-
estate property.
Okay.
for
Yeah, that's a
1031
good point.
exchange.
In fact, I would also like to supplement, the real estate has to be replaced by real estate. You cannot replace a real estate property with the personal property.
Correct.
Like you may be having some cars, you may be having trucks. Those are separate ones. You can replace a car with a car or a truck with a truck.
Sure.
That is
Okay.
possible, but
Okay.
not the real estate
Not
with
the
the
real estate.
personal properties.
Okay.
Correct.
Now,
Good to
another
know.
important thing which I would like to mention here is that because we are talking about the replacement property, the replacement property must be identified within 45 days. 45 days from what? From the date you have sold the relinquished property.
I see.
From the date of settlement. So that's why my advice to the viewer is, whenever you are thinking about the exchange transaction, always think about the replacement property first.
Before
Because
you-
you have
good
just
point,
a
yeah.
small window, 45 days. And if you cannot identify the replacement property on the night of 45th day, your exchange transaction is over.
Is over.
I see.
Yes.
This deadline cannot be extended under any circumstance.
I see.
So what I tell the viewer is, basically what you should be doing is, maybe you can enter into a contract for the purchase of a replacement property, but defer its settlement date.
Right.
Okay.
Because entering into a contract doesn't have any kind of bar on the exchange transaction. This is the settlement or the closing date which matters.
Correct. Correct.
And
Now,
I'm sorry.
I'm
excuse
sorry.
me. No, go ahead.
Just wanted to, before I forget, just wanted to add to that, the 45 days, you have 45 days to identify the property that you're going to do for 1031 exchange on. But then there's another threshold or deadline of 180 days. I just want to make sure that viewers understand that that 45 days is actually part of that 180 days.
It is.
So
It's
you
not in
actual-
addition.
It's not in addition to
Okay.
that.
That's
It's
a
not
good point.
225
Yeah.
days, it's actually 180 days.
Okay.
And your deadline from the day you actually sell the property and the day you buy the property, you have a total of 180 days to actually close out on both the transactions.
Okay.
And other thing I would like to supplement here, Mr. Bloch, which probably is very close to your heart. Now, when we are talking about 180 days, let us say that relinquished properties settlement took place on October 15th.
Yes.
And the tax deadline for filing the personal tax
right.
return is April 15. So anything that happens after October 15, then that person is not even going to have 180 days.
Correct.
Because if
that's
the tax
right.
deadline is April
That's-
15,
you're
so
absolutely
then
right.
this period gets shorter.
Yes,
Thank
correct.
you.
If you
'cause-
don't do within that, if you are having some kind of misunderstanding, you lose the benefit of
The
deferring
ruling
your
actually
capital
says
gains.
that it's either 180 days or the tax return filing deadline whichever is earlier.
Including extension.
Including extensions,
Including
correct.
extension. If
Yes.
somebody filed for an extension, then of course it gets extended.
Correct.
And you have the full benefit of 180 days.
Thank you for telling me that, so I give my clients the right advice.
So other thing I would like to say, though I previously mentioned, the examples of properties that would qualify would be commercial property, farmland, rental property, and apartment buildings, which of course you did talk about in your question as well.
Yes.
Yeah.
So we spoke about what are the rules in terms of finding like-kind properties, that it is real estate to real estate. It doesn't have to be an apartment building to an apartment building, but it can't be personal property. If I want to buy a property that's going to be under construction, can I buy new construction? I can if I keep it for a rental property, and it will be completed in the allotted time frame. Is that so?
You can buy for the
Okay.
purpose of construction, but remember, if you are already owning a piece of land,
Yes.
then it won't be treated as the exchange property.
I see.
If you are just constructing on that piece of
I
land.
see.
But if you
Okay.
buy a new piece of land and you are constructing on it, then of course it's covered under the
Okay.
exchange transaction.
Okay. All
Yeah.
right.
Another important thing I would like to say, when we are talking about the identification of the replacement property within 45 days from the date of closing or the settlement of the relinquished property, now what's the requirement? You have to just give the legal description of the property
Okay.
and the street address. You know, if you have given this much information, you have met the requirement.
I have a question. What happens if I'm going to do a 1031 tax exchange, and then let's say that the transaction falls apart? Let's say that the property that I identify, the seller changes their mind and doesn't want to purchase or sell the property to me anymore. Do I lose my opportunity to do the 1031 exchange?
For the most part, the answer to that question is yes.
Okay.
So remember, this is part of the code. This is part
Okay.
of the tax code.
Okay.
Code, as you know, it's written black and white. There are no gray areas here. They're very clear.
Okay.
They want you to do your homework beforehand, and as Mr. Khurana said,
Okay.
make sure that you actually defer the closing, and you do all these things to make sure that you're not missing out on the deadline. But unfortunately, I have not seen anything where you
Okay.
can actually get some kind of a relief on something like that.
So it's important to make sure you identify
Yeah.
a good property.
Yes.
Okay.
On the other side, I would like to say that you can even identify up to 3 properties.
Oh, you
at
can?
at the
Yes,
same
you can do
time.
multiple
terrific.
But
Correct.
this identification has to be within 45 days.
Can I buy 3 properties at once?
Well, within the value, because
Within the
you are
value, yes.
deferring your capital gains.
Okay.
Let us say that the property which you are relinquishing is valued at 100,000.
Yes.
Then you can buy 3 pieces of properties.
Okay.
But if you buy more than that, your benefit is limited to $100,000
Correct.
I
dollars
see.
only.
That's actually
Yeah.
a very important point, and lots of times people are not really clear on this. You can actually sell one piece and then buy 3 or 4 different ones, as long as you stay within the threshold of what the guidelines are. As Mr. Khurana mentioned, $100,000, you sold the property for $100,000. As long as you buy 3 more that are over $100,000, either $100,000 or more, you can actually.
And in certain situations, you can even identify more than 3 properties.
Okay.
Maybe up to 4. But in that kind of situation, the total value of the identified 4 or 5 properties should not exceed 200% of
200% of
the
the
value of the relinquished
Right.
property.
And so when I identify 3 properties hypothetically, and I have $100,000 worth of cash to go towards those properties, am I just using the $100,000 cash to purchase them, and can I get mortgages with them, or that has to be $100,000 or more is the grand total? I'm just trying to defer the capital gain on my $100,000, so I should be okay. Is that correct?
I don't see any problem.
Yeah,
with that.
the question here is you are deferring your capital gains tax.
Yes.
It's not a question of how much mortgage you are raising to buy those properties.
Okay.
Because so long as your contribution and mortgages would give you a benefit of deferring your 100,000 capital gains, you're fine.
Okay, very
Yeah,
good.
yeah.
Nice, good to know.
Yeah.
Good to know. So then if I am going to identify my properties, I need to be under contract. This is a very complicated subject matter, and I thank you both for being here and helping us answer some of these questions. If any of our viewers have more questions about this complicated subject, please contact the studio and we'd be glad to get you some more information if you're looking to do a 1031 tax exchange on real estate.
I would just like to make a quick comment about the qualified intermediary because we didn't get a
yes.
chance to talk about it. Always make sure that you get in touch with an experienced.
Yes.
Because I would say intermediary is not covered under kind of licensing in Maryland, Virginia, and DC. Only Nevada State is the one which enforces the licensing. So be sure that you are in safe hands.
Yes.
Thank you very much.
Very important. Thank you for that note.
Thank you.
Thank you for
Thank you,
coming.
Adil.
Thank you.
Thank you, Adil.
Thank you.
I appreciate it.
Thank you. Thank you.